Hi everyone, welcome back to the Property Finance Podcast. And today I want to talk about what happens when budgets blow up. So we're going to talk about when you're getting into development finance, when you're doing developments, refurbs, XYZ, what are the 5 key points that you need to keep in mind when dealing with budgets, and what do you do when they blow up and go completely out of control? So I've got a few points written here that I'm going to go through, and we're going to cover off 5 key points, which will hopefully deal with anything that may come up. So the first key point is recognizing the early warning signs of budget overruns and kind of how to deal with that. So your first kind of warning sign, especially in developments, is you're going to have a QS, so quantity surveyor. They're going to come out as part of the lending process. So they're going to be employed by the bank. Obviously, you're going to pay for them, as you always do in this sort of process. But you're going to pay for that QS. They're going to come out on a drawdown by drawdown schedule. Now, what's going to happen is they're going to have a breakdown of your build costs, and it's going to be itemized. So you'll have item lines for all of those build costs. So your first warning sign is going to be when the QS starts to look at things and go, oh, okay, right, you're drawing down for this, but you've used X amount of your budget, but you've still got all of this. They're going to be your first kind of warning sign, if you like, of right, okay, something's a bit amiss here. So it's always key to, whenever they come for a drawdown meeting, whenever you're dealing with them on a month by month basis, is to use them to understand, right, how am I looking on my costs. Now, for the more seasoned developer, you're going to have your project manager, you're probably going to have in-house buyers, quantity surveyors. So you're going to have a pretty good idea before you get to those monthly drawdowns that you're starting to hit cost overruns. The contractor also, if you're a first-time developer, the contractor's also going to let you know pretty quickly when there's costs that are going to go up, because obviously they're going to have to ring you and ask for your permission for cost overruns and things like that. So again, if you're part of a JCT contract, that's a massive, massive thing. And we'll talk about that in a separate episode, but ensure that you've got your JCT contract in place. And actually, we did a podcast episode with Richard Stone, which I think would be worth going back and listening to. We've also done a podcast episode with Jake Southers. That's also worth going back and listening to. So Jake is a QS. Richard deals with a lot of, what's the best way of describing him? He'll hate me for this, but kind of what we spoke about a lot with him on the podcast is talking about JCT contracts and ensuring that all your contracts are in place and done in the right format and everything else. And we spoke about cost overruns. He is more focused on kind of the management side of a build, so the project management side. So he is great for the contracts and things like that. So worth listening to those 2 episodes. I think they would be good for understanding what contracts you need in place. The second key point that I want to cover off. So the first one, we're talking about kind of the warning signs. So checking contractor, QS, getting your JCT contract in place and ensuring that that's in there as kind of a fallback if costs start to increase. The second one is kind of the key steps that you can take. So one of the first ones is if the contractor comes to you with a potential cost increase, is checking through your JCT contract, checking with your project manager, checking with solicitors XYZ, making sure, like, actually, does this need to be included? Do I have to pay for this? Is this included within the contract? So just double checking that. When you've got your QS on board, when they come to you and say, we think you've got a bit of a shortfall, it's a case of, at that point, and communication is key when it comes to this kind of thing, is communicating with the broker, with the lender, and saying, right, okay, we've potentially got a cost overrun here. We've gone through it. We understand, looking at the numbers, that we think there's going to be a shortfall. Speaking to the lender and saying, can you cover that shortfall? Because what tends to happen on a project, and not so much these days, but kind of previously, and hopefully we're going to get back to these days, but what would tend to happen is you would start your facility off at 65% loan to GDV. So you'd have your build costs, your contribution to day one, everything else. We've had people who've got halfway through the build and who have then said, I've got a bit of a cost overrun. Could you increase your facility? And what's happened is they can't increase their loan to values or anything like that. So they're still at 65%. But what they've done is they've actually asked the valuer to have a look at the site and say, look, has the GDV gone up at all? Has there been any shifting or anything like that? So in that particular scenario, it went from about 2.3 to 2.5 million. So there was kind of an extra 200 grand of GDV, which then you did 65% of that. Works out about, 120 grand. I don't know how good that maths is off the top of my head, but let's call it that, 120, 130 grand. So what that then meant is that they could then take that extra 120, 130 grand onto their build costs, which covered any overruns. So if your GDV is increased, even by a small amount, that increase, you then get 65% of that increase added into the facility. So it's worth looking at that. I'd always say that is your first port of call. Obviously, apart from that, you've got things like for example, private investors that you can bring in, mezzanine finance. Mezzanine finance is always kind of a forgotten one. I think it's worth definitely looking at mezzanine finance as a solution, because that just comes in as second charge, goes up to 75% loan to GDV. So actually, in that scenario where we were speaking about earlier, where the GDV had gone up by 200 grand, what difference that actually makes is that 200 grand increase that took it from 2.3 to 2.5, if they'd have then taken mezzanine as well, would have increased their facility from 65% of the 2.5 to 75% of the 2.5. So it's about a 250 grand increase in their facility there. So it makes quite a big difference. So it's worth looking at mezzanine finance as well as a second charge solution. Obviously, private investors, you kind of need to weigh up each one deal by deal and see whether it's worth actually taking into account. So key point number 3 is kind of doubling back on that communication and ensuring that any communication with the brokers and the lenders is transparent. So transparency is key. The amount of times where I've seen horror stories from developers who, luckily, touch wood, haven't been our clients. We've sort of heard it on the grapevine, or people have come to us after they've had a bad experience with other lenders, is what will happen is they won't have been completely transparent with the lender. They'll have hidden bits, they'll have buried their head in the sand, they won't have dealt with things as quickly as they should have. And the risk you have then is that you upset the lender. So the minute you upset a lender, you're not getting any extra money. They don't deem you as investable anymore. So from a lender's perspective, you want to remain investable throughout the entire project, because realistically, you want them to keep investing. If there's a cost overrun or if there's a delay or anything like that, you want them to keep investing their time, their money, their effort, everything else. So by not being transparent, you lose that trust with the lender. So transparency is key. Keep talking to the lender, keep being open and honest with them, talk to the broker. The broker obviously can act as your middleman, as they should do, with the lender and opening those chains of communication. And it's just a key thing to have. So I think that transparency, that openness is always worth having. The 4th key point I want to talk about is reallocation of funds and potentially cutting cost. So this is not necessarily my area of expertise by any stretch of the imagination. I talk about finance. I don't talk about how to save money during a build, but it's something where it may be prudent to bring on your own QS, your own project manager. If you're 60% of the way through a build and the current contractor is causing problems, they're increasing build costs, everything else, bringing in your own project manager, bringing in your own QS might just curtail that slightly and allow you to take a bit more control, because the problem as a first-time developer is you are seen as naive potentially, and contractors will naturally, they will go for that. They will sort of prey on that, if you like. So you've got to make sure that from that side of things, you've got those professionals in front of you that stop you coming across as naive potentially. So it's about, if you start to notice that costs are spiraling out of control, it's about getting project managers, QSs, and bringing those costs back under control. So the likes of someone like Richard Stone, Jake Southers, who we mentioned earlier, they're just 2 examples of many, many people who can help with this kind of thing. But if we took those 2 as an example, Richard would come in and potentially would assist with, and I'm essentially writing his own CV here for him, but if you go back and listen to the episode, you'll be able to see as well. But essentially he would come in and would be able to assist with the project management, looking over costs, understanding, right, okay, is the contract airtight, watertight? Are you in a good position? Jake would come in and would potentially look at assisting with those individual line items. So looking at specific individual things and saying, right, okay, could you cut costs on that one particular line item? Could you cut costs on that particular line item? And that's what it's all about, is them coming in and being able to save just a little bit here and there, but it all soon adds up. So that other key point is, if your budget is starting to blow up, is get the professionals in. And then the 5th key point, last one for this one, is preventative measures. So if you have a project where the budget blows up, actually in a weird way, that's quite good. Because what that does is, and funny enough, I was talking to someone about this morning on the marketing stuff, you kind of almost need a bad experience so that you can learn from it. So when I was speaking to our marketing lady this morning, it was talking about, well, actually brokers go through feast and famine. So when you're feasting as a broker, so when you've got loads and loads of business coming in, you very rarely change what you do. You very rarely learn from anything. So you become comfortable. When you go through that period of famine, you don't have much business coming in. That's where you adapt. That's where you begin to bring in business by other means. But when she was sort of talking to us about it, it was like, well, actually, you need to move that famine mindset to feast. And actually, what you need to do is while you're feasting, you still need to think about actually the lessons that you're going to learn over here and still be bringing in loads of new business by new strategy. So it's very similar with if you have a bunch of developments that go really, really, really well, you're going to become almost numb and oblivious to the bad stuff. So you start to feel like you're becoming invincible. So you maybe don't have as many preventative measures in place. Maybe on your next one, you might say, actually, do we need to worry about JCT contract? Do we need to worry about doing a feasibility statement? Do we need to worry about bringing a QS on board? Do we need to worry about bringing a project manager? We've done 5. They've all gone really, really well. Do we need to do this? So you almost need that bad experience of a budget blowing up so that you can learn from it, so that you can understand how to get through it and essentially how to build those processes to prevent it happening in the future. So although it is doom and gloom, when it does go wrong, it can be really, really good. And it's the same with anything. A bad experience becomes a good experience if you learn from it. So it's that thing of, if your budget does blow up, don't all of a sudden think, oh God, I need to leave developments. I can't possibly ever do a development ever again. Learn from it, bring the professionals in, bring the communication in, bring your processes in. And by doing that, hopefully the budget gets back under control and you then get back to a point of having a profitable deal, and then you can exit it, move on to the next one with all of these processes in place to make sure that doesn't happen again. So hopefully it was really helpful. It was just a really quick one, just something that keeps coming up every now and again at the moment. With obviously the market that we're in, cost overruns are more and more regular at the moment. They happen so much more. And it's just about working out how to fight through those. So 5 key points for you. Take them, learn from them, understand them, use them. And if you found this helpful, please like, share, all the usual stuff on social media, subscribe to the YouTube channel, subscribe to the podcast, all of that stuff. And yeah, thank you very much for your support, and I'll catch you on the next one.